Hi, this is Chris Lyon bringing a presentation of financial analysis in regards to interim management support. Our introduction here has a medical group and a university system who had just established an entity and found themselves having issues with accounts receivable. The teams on this group are understaffed, and they also need an improved culture focused on attention and need a structure that was more appropriate for leadership and in the accounts receivable area especially. Taking a look at the financial statements here, we have the total assets of, and these are in millions, but it's 157,303 for 2017 and 141,208 for 2016. So the assets went up. However, when we get to the balance here on 2017, the balance after you take the expenses and liabilities off of the assets for 2017, it was 60,160, and for 2016 it's 70,418. So basically what that tells us is there was less of a balance between 2016 and 2017, which means the balance of the organization is trending downwards. Looking at some financial statement charts here, the first one here is investments, and you can also see with our investment chart that from 2016 to 2017, the investments of the organization is also trending downward. Going on to our next one here is the cash available for the organization from 2016, which is in the green there, to 2017, which is in the red. We can also see that there was a downward trend with cash available as well, with roughly 19,000 up there. And again, these numbers are in millions, so 19,000, and the red bar being about 17,800 there. So we are also seeing a downward trend in financial statement charts. And on this financial statement chart is current ratio, and on the far right hand side there we are seeing 2016, which was about 2.5 on the ratio, and 2017, which was between 1 and 1.5 on the ratio. What this is telling us here, the higher positive number, the better overall outcome of your organization. So we can also see this is in a downward trend. The way current ratio is found is by comparing the current assets of a company and comparing it to their current liabilities. So basically, you would divide the current assets by the current liabilities, and like I said, the higher current ratio number, the better off the organization is. So we were also seeing a downward trend there as well. Moving on, there are some different financial analysis methods. There are two main methods in this group, and the two main methods are horizontal and analysis and vertical analysis methods. So those are the two most common ones. Vertical analysis works by having every line item transformed into a percentage. This can be done by taking the line item and dividing it by a baseline item and then multiplying by 100 to get a percentage. This analysis allows to compare companies by using percentages to compare assets and long-term assets. The horizontal analysis works by targeting the percentage change in a particular item from year to year. The formula that can be used to calculate this analysis is by taking the subsequent year and subtracting the previous year. Then you divide that by the previous year and finally multiply by 100 to get your percentage of change. One of the other methods that can be used for calculating this is the ratio method, and this one is comprised of different ratios. There's the liquidity ratio, there's revenue and expense and profitability ratios, there's activity ratios and capital structure ratios, and each of these are able to dictate how well an organization can meet obligations, how they are able to, how they will generate revenue, or how their assets and debts are also being handled and organized there as well. So those are the different financial analysis methods that can be used. Next one we have here is the capital management. With this, we are going to be focusing on the break-even analysis. The break-even analysis has two different sorts of factors. There's their creation factors, and then the basic factors of the break-even analysis. So the creation factors include demographics, competition, and pricing. And then the other factors include costs, utilization, payments, and clinical consideration. With this, for example, cost considers all of the upfront costs associated with new services and technologies. And then utilization has a direct effect on break-even points and profit margins. The basic purpose of utilization is taking the costs and revenue numbers and comparing how many services would need to be performed in order to remain profitable. And then one large factor in this also was population demographics, which was a creation factor. Population demographics basically is the form of considerations that a clinic needs to make in regards to the population of a certain area, and then taking that population and determining what kind of services are needed. For example, if you're in a population with a high percentage of people needing joint replacements, it's obvious that the investment should be in doing joint replacements. And then the geographic area is basically who you're competing with for these services, if there's any competition in that area, or if you're the main organization that handles those types of services. With all this considered, with the proposal, at this time I would not support implementing a new EHR system. I guess the question is, why not? I propose that our healthcare system not implement an EHR system at this time, because I have come to the recommendation based off of a few important factors. It is our first duty to look out for the well-being of this organization, being on the financial side of things here. But first and foremost, we had to look at how things were trending in the past, and everything that we are seeing is on a downward trend as far as investments, cash, current ratio, and then basically the bottom line is all trending downward. Basically it's telling me that things are not as profitable as they have been and where they should be. Another factor that went into this decision too is our increase in accounts receivable, and that's where this has been a struggle for this organization. Is we are seeing an increase in people attending our hospital and our services, but however, that means more people are owing the organization money from this year compared to previous years. So although those services are there and are being used, we have not been able to collect on them as of now. And again, those are in accounts receivable, which is basically where we are owed money by our debtors, and that's kind of where we sit there, is that's on an increase. So again, at this time, I would not recommend the new EHR system, just because I don't feel it's a financially good decision to fit within our budget at this time. Other than that, if we have any questions, I'd be willing to take those at this time. If not, thank you for your time, and I hope that you have gathered some information from this presentation that you find helpful, and also that we are able to move forward and have a very profitable 2018. Thank you.